Good morning. I am Malik. If you are waking up this morning looking at your portfolio and smiling because the KSE 100 hit 179,035 on Friday, stop smiling. You are looking at Friday's price in a Monday world, and the world just broke. While you were sleeping, the United States military launched Operation Absolute Resolve. U.S. forces have entered Venezuela. President Nicolas Maduro has been captured and extracted to New York. This is not politics. This is economics. Venezuela holds the largest proven oil reserves on the planet, and as of this morning, those fields are a war zone. The impact. Brent crude is not staying at $55. The Goldilocks era of cheap energy that fueled our rally last week is dead. We are looking at a supply shock that could send oil back to $85 or $90 by the end of the month. The PSX conundrum. On Friday, we saw a record 1.1 billion shares trade. Institutions bought banks and autos betting on peace and low inflation. Today, they have to reverse that trade. We are about to witness the most violent sector rotation in the history of the Pakistan Stock Exchange. If you are not prepared for the war trade, you will be wiped out by noon. Welcome to the war room. Before we get to the stocks, you need to understand the trap that just snapped shut on the bulls. Trap number 1, the Federal Reserve and the dollar. With oil spiking, U.S. inflation comes back roaring. The Fed was supposed to cut rates in January. Now, they might pause or even hike. A hawkish Fed strengthens the dollar. This puts massive pressure on the rupee. If you are holding tech stocks like TRG Pakistan, closed 74.30, or Systems Limited, closed 169.53, you are in the kill zone. Tech stocks are long-duration assets. They die when interest rates stay high. My call? Sell the gap up. Tech is dead money in a war scenario. Trap number 2. The China surprise, commodity supercycle. Nobody is talking about this yet because they're focused on the war. China's manufacturing PMI for December just hit 50.1, unexpectedly beating forecasts. Data source, NBS China. For 8 months, China was asleep. Now they are expanding. Awaking China eats commodities. They eat coal and steel. The danger for cements. If you own cement stocks like Lucky Cement or DG Consement, listen to me. Cement companies run on coal. China buying coal equals higher costs. War in Venezuela equals higher freight costs. Your margins are about to get crushed from both sides. The verdict, the cement rally is a fake-out. Use liquidity to exit. So where do we hide? Where is the safe haven? We go to the sector that prints cash when the world burns. Oil and gas exploration, E&P. Look at the board from Friday. OGDC, 294.49. PPL, 243.97. Mary Petroleum, 730.18. These stocks are priced for $60 oil. They are not priced for war oil. Here is the intel nobody else has. Russian gas exports to Europe have collapsed by 44%. Putin is desperate to sell energy to Asia. Pakistan is in the perfect spot. We buy discounted Russian crude for our refineries, while OGDC sells its local production at international war prices. It is a double arbitrage. OGDC is the godfather play of 2026. My target? If we cross 300 today, the algorithms take it to 350 by Friday. Don't fear the red tape. Buy the reserves. Now, let's talk about the specific trades on the table for today. War or no war, these corporate actions are happening right now. 1. The gas gamble, SSGC, at 10:30 a.m. Sioux Southern Gas holds a special board meeting at 10:30 a.m. Subject, matter other than financial results. The thesis, with the energy crisis back, the government must solve the circular debt. If SSGC announces a tariff settlement or unbundling news at 10:30 a.m., the stock hits upper cap instantly. It closed at 36.48. The risk-reward is 10-1. 2. The sugar cartel, the cheat code. This is the most guaranteed trade of the day. Al-Noor Sugar already declared 40% cash. Shamarad declared 60%. Today, the floodgates open. 11 a.m., Chasma Sugar. 11:30 a.m., Premier Sugar and Atom Sugar. 12 a.m., Farron Sugar. The algorithm. Keep your eyes on Chasma Sugar, CHASM, at 11 a.m. If they declare a dividend, you buy Farron, FRSM, and Marin, MRNS, immediately. You are front-running the news cycle. It is algorithmic trading for humans. 3. The sleeper, Dewan Cement, DWEN. Friday evening, Dewan's board approved the loan-to-equity swap. The bankruptcy risk is gone. This stock trades at 12.78. It is a penny stock with a restructuring story. While the big boys fight over oil, DWEN could quietly double in value. One last thing. Look at the volumes. 1.1 billion shares traded on Friday. Whether the market goes up or down, who makes money? The brokers. JS Global Capital has a board meeting today at 10 a.m. Intermarket Securities meets today at 3:30 p.m. These guys are sitting on record commissions. JS Global closed at 177.28. If they announce a special dividend or buyback today, the entire brokerage sector, AHL, AKD, wakes up. In a gold rush, sell shovels. In a market crash, buy the brokers who charge the commission on the panic selling. Let's summarize the war room strategy for Monday, January 5th. The context: U.S. invades Venezuela. Oil spikes. China wakes up. Inflation returns. The portfolio: sell tech, TRG, systems, and cements, Lucky, DGKC. The macro headwinds are too strong. Buy E&P, OGDC, PPL, the only hedge against war. Trade: SSGC at 10:30 a.m., sugar stocks at 11 a.m. The mindset: do not be a hero. Do not buy the dip on high PE stocks. Liquidity is your best friend today. Watch the foreign investors, FOMO, numbers tonight. If they are selling, this rally is over. I'm Malik. The world is burning, but the market is open. Trade smart.